Hi guys, welcome back to another episode of this weekly video. Alright, I missed out doing this video on the weekend, so today currently in Singapore it's on the Wednesday. Alright, so it's more of a midweek analysis. So once again, if you are new, alright, what we usually do in this kind of video is I'll share with you some of the market outlook, alright, some of the potential setups that we are looking at, and also during some of the videos, we'll share with you some of the techniques and methodologies that we use, and hopefully through this process of sharing with you, you actually understand and have a different perspective of how the market's actually performing and how different traders have different insights into the market outlook itself. Alright, so for those who have been with us for some time, really thank you for your support. Do like and share this video. Alright, so let's kickstart this video, and what I like to do is to go through some of the key events for this week itself. Alright, if you go over to Forex Factory and you look at this particular week, you actually notice that there isn't much of a key tier 1 kind of data releases. Alright, some of the important one for tomorrow, alright, Thursday, is perhaps Aussie and Pound, right? And of course USD in terms of core durable goods. But if you look at the overall week itself, there isn't much of a key data coming out this week. So having said that, most of the events, the key events that's happening is gonna be really focusing on the few key things that are happening over in the financial market recently is the oil prices, as well as the UK exiting the Eurozone, right? So these are some of the key things that you might want to keep an eye on in the news headline and such, because they are definitely going to affect the currency market as well. Alright, so having said that, what I want to share with you today in this video is basically go through with you three currency pairs, alright, the Aussie dollar, the Euro AUD, and the Euro Kiwi. Right, so first thing first, through this video, I'll be sharing with you a lot on technical aspect, alright, but if you are into trading, you might also want to look into the fundamental and sentiment analysis of it as well, which we do take note of those as well on our side when we are trading, right? But in terms of video analysis, there's a limitation to how much we can share, alright, to keep this video the length of this video not too long. Alright, so what I'm going to share with you is really the more of the technical aspects of how we do analysis over here. Alright, so the first pair is Aussie dollar. Alright, if you look at the 4-hour time frame, you can see that what it's doing over here in the recent time is actually going up. Alright, it's rallying, and if you are into the shorter term, alright, basically you are riding on this short-term trend, which is overall going up. Alright, we do have an advanced pattern happening, alright, and it's the Cypher pattern, alright. So let me pull in my Fibonacci tool, alright. If you pull your Fib from here, this leg to this leg, alright, let me pull in all the Fibs. Right, so if I pull Fibonacci from this leg to this leg, you can see the retracement comes in around the 50% retracement level. Alright, and if we do the opposite, alright, the extension of it from here to here, you can see that price reached the 127 extension. Right, so if you have a 50% retracement over here and 127 extension over here, basically what we have over here is a potential Cypher pattern. So if you pull Fibonacci from the initial leg, alright, all the way to the highest high, Cypher pattern completes around the, pull in my right too, right, completes around the 786. So you normally see Cypher patterns happening like this. Alright, and this is actually a bullish Cypher pattern. Alright, so what we are waiting for if you are trading this kind of setup is waiting for price to actually retrace further, alright, back down to the 0.7035 level, around that zone, and you're looking for a buy opportunity. Right, so there are a few kinds of method that you can adopt in terms of execution. One, you can put your pending orders over here. So should market come, the price of this market comes back down to this level, right, you'll be automatically filled in that order, in that trade. right? The other way you want to execute your trade is, of course, in terms of market execution and wait for more confirmation. What you do is you wait for price to come back down to this level, all right, and form perhaps some price action in terms of a reversal price action, be it a pin bar or engulfing bar, right, and then you enter the trade, right? So there are a few kinds of method that you can adopt. Whichever method they adopt, the best way to actually find out is whether it fits your personality, and second is to perhaps test out whether there's a certain edge of using that kind of particular method, right? So having said that, this is one setup that you might want to keep an eye on. All right, Aussie dollar, the level to watch is 0.735, right, and this is a bullish setup. That means should price comes back down, we are looking to actually buy it. Alright, simultaneously, what's happening over Euro Aussie, alright? You can see that Aussie dollar and Euro Aussie both has Aussie in it, alright? So you want to take note also in terms of your exposure to a particular currency, which I'll share with you more later in this video as well. Alright, but having said that, in this particular pair, what we have is a potential setup on an hourly chart. Alright, so on the hourly chart, you can see that price has been moving in a very nice trend environment, alright, and is going downwards. So what we are interested at, alright, is to trade on this trend, right? Basically, what it means is we are looking for shorting opportunities, and how we are doing that is we use a lot of Fibonacci tool, right? So if we pull from Fibonacci from the top of the recent leg to the recent low, right, recent high to recent low, what we are interested at is actually this level. Right, you can see the 61, cleared it off. You can see the 61.8 retracement level coincides with your previous structure support, alright, which is now broken, turn resistance. So what we are interested at is should price comes back up to this level, alright, at the 1.5488, alright, around that region, we'll be looking for a short setup. Right, riding in continuation of this trend itself. In terms of stop loss and TP, all right, there's a few ways you can play around with. For how we do it is we like to keep our stops very tight. All right, so some of the traders like to put their stop loss above the previous high. All right, but what we do it over here is we put our stop loss just above the previous Fibonacci level, which is the 786, so slightly above this, and we aim for target at the previous low. Right, so let me show you the risk to reward ratio that you can expect trading this kind of setups. Right, so if you target around here, you can see that this particular trade gives you a risk to reward of 2.5, very decent. Right, but of course, if you pull your stops just above the previous high, you still have a risk to reward of more than 1. Right, not too bad as well. So that's something that as a trader, you need to decide for yourself which fits your personality, which fits your profile better. Right, are you okay with getting stop out more frequently, but when you get a winning trade, your risk to reward gives you that edge in terms of still profiting without a high hit rate. Right, this is something that you also want to take note of. Alright, and of course the last pair that we want to go through with you in this video is Euro New Zealand. Similarly, on the H1 chart, you can see that the overall trend is still going towards the downside, and similar to the Euro Aussie setup, if you pull in Fibonacci from the recent high to the recent low, what we are interested at is actually at this level, right, around the 618, right? And of course, if you're more conservative, the 786 level also has some confluence, all right, over here. Right, so basically what we are looking at is in this zone, all right, this entire zone is a potential sell zone that should price comes back up over here, we are looking for a potential sell entry, right? And what you can see over here is you can already see price action, all right, even though we haven't entered that zone, is already starting to react to it. You can see a pin bar forming over here. Right, so this will be the level, all right, that you want to keep an eye on should you want to trade this pair. Right, so once again, I mentioned just now talking about exposure, alright, so this is where you need to take note of, alright. If you're looking at Euro Aussie and Euro Kiwi, right, both are very similar in terms of their setup, right, in terms of direction, both pairs we are selling into it. And what you want to take note is the correlation in terms of Aussie and New Zealand is very close. And since we are looking at pairs, for example, Euro Aussie and Euro Kiwi, they are so close in terms of correlation that if you decide, alright, to trade both of this currency in full risk, that means Let's say, for example, usually you risk 1% per trade for your account, right? And if you decide to trade Euro Aussie and Euro Kiwi, both risking 1%, you're actually opening up your exposure, all right, 2 times more than your usual, all right, because of the close correlation, all right. If you take both trades, you're typically increasing your risk exposure. So what I recommend most of the traders is there are a few ways you can do it. All right, one is you actually reduce your risk per trade, meaning if you want to take both trades, perhaps usually you take 1% per trade. All right, 1% risk per trade. You might want to reduce your risk to perhaps 0.5 for each of this. Right, and of course the other way to do it is to only select one of this to actually trade it. Right, so this is some ways to actually manage your risk exposure so that you don't get exposed too much in the market in a particular currency itself. Right, same goes for Aussie dollar over here. Right, so having said that, these are the three pairs that we'd like to share with you in this video. And if you're trading these currencies and you're trading this kind of setups, all right, do take notes of the levels that we've shared with you. All right, so before we end off this video, I want to quickly do a shout out to people or traders in Singapore, because what we have over here is a free it's not a free workshop, all right, but it's a workshop that I would say the fee itself, the registration fee itself, is very reasonable, and it's pretty low, alright. And this workshop is actually not organized by us, but it's organized by Online Traders Club, right? So I'm really thankful for them to actually invite me to share with you more about my experience and certain methods that we adopt over here in trading, alright. So this workshop will be held on the 9th of March, alright, which is soon. It's a Wednesday in the evening from 7:15 to 10, and it's at CMC Markets in Singapore, right? So you have to pay for it because Online Traders Club actually charges for the registration. But what we are also topping up on this is that we're actually giving out our trade signals for free for the month of March, and this is only applicable for those who actually attend, because what we will do is we'll collect your email and contact number, alright, during the workshop itself, and we'll be adding you to our subscriber list for the trade signals for the month of March. Alright, so it's very simple. What you need to do is just simply click on the link. Alright, you go to FXP Research, which is our website, under market analysis, the 5th February one. Alright, there's a link. Alright, join us and register your seat here. Alright, so simply click onto this. You can read up on a short description of what this workshop is about. Alright, definitely I'll be sharing with you more than what is stated over here if the time permits. All right, and of course it's $20 for non-members. Right, so you simply have to just click here and you can register for it under Eventbrite. All right, so having said that, if you have any questions, alright, feel free to drop your comments below and we'll be more than happy to actually address them to you. And if you like this video, alright, in terms of analysis and such, do subscribe and like the video, and share with perhaps one of the traders that you think might benefit from the videos that we actually produce out here. Alright, other than that, trade according to your plan, and I'll see you soon.